Hello everyone, this is Gary Meir, your instructor. This video will discuss our next chapter in Payroll, Chapter 3, and it talks about Social Security taxes and their computation as well as their deposits and deposit requirements. So I want to start basically with some overview problems. I also want to remind everyone the due dates for Chapter 3's assignments. We're looking at March 6th at midnight for the assignments, and then the exam to be completed by March 8th. So that's our goal. Let me know if you have any questions or concerns. I know spring break is coming up after that in short, so keep me posted with any problems that you're having. So to review, basically our computations for Chapter 3, I've used some other problems that I've created on my own. These are not really in the book, but I want to kind of show you the layout or how the book will ask you to complete these type of problems. So we have here 4 employees, A through D, with their wage amounts. And remember with Social Security, it's made up of 2 parts, an OESDI, or this is our retirement portion after we retire, and then this other portion, the HI, which is Medicare, health insurance, right? Medicare is health insurance. The rates are shown. They haven't changed in years. They're still at 6.2 and 1.45. We'll talk about wage caps shortly. But basically, we have an employee who has, for A, $500. From that, we take 6.2% to get to 31, 1.45% of 500 to get to 7.25. And FIT stands for federal withholding, right? We have to pay income tax on that earnings, as well as SIT, which is state income tax. You subtract all of those deductions from an employee's wage, you get a net pay of $316.75. So this is a payroll, and you'll notice that for each payroll that we have to sum up, that's what's in the red letters, the total wages for the payroll register, and then also do that for each of the deductions. And what I'm trying to show here, I know it's very, very, a little messy, I guess you could say. I'm trying to show that with Social Security, right, there is a employee portion, and that's what the EE stands for, and that's where we're grabbing this number here, the 189.10. But there's also an employer half, I could say, or matching portion, and that's the same amount, 189.10. And you can see that we do that also for Medicare. There's an employee portion and an employer portion. In addition, for the 941 deposit now, and you'll be asked to compute this amount, we have to be sure that we have all parts to this deposit. And there are 3 of those parts, and these are the 3 in the triangles. The Social Security, the Medicare, and then the federal withholding. These are all federal taxes here. And that's all that's included on a 941 deposit. Now, this is an April payroll. And this is a monthly depositor. And I've got that mentioned here. So that deposit, you'll be also responsible for that information, is due on the following month, 15th day. And obviously, if the 15th day lands on a Saturday or Sunday, you have that until Monday to make that deposit. And if Monday is a holiday, then it goes to the Tuesday date. So be aware of that requirement, not only computing the amount, but also when is it due. Now, with this particular employer then, I just want to mention before we go on here that a semi-weekly depositor means they have to pay more often. So in that case, you'll be quizzed on when are those deposits due. So here I have a pay date. Remember with payroll, pay date or check date of the payroll dictates when that deposit will be due. So if we have a pay date for a payroll on Wednesday, Thursday, or Friday, its deposit for the 941, that's what we're looking at here, the 941 deposit is due the following Wednesday. Also, if the payroll is, again, here's the check date, is dated on a Saturday, Sunday, Monday, or Tuesday, you have until the following Friday. And this is also contained in your textbook on pages 18 and 19. So please watch for that. Be ready for those type of questions on your problems as well as on the exam. But the goal of this, again, problem here is not only to compute the payroll and also compute the deposits. Remember, we have to complete the 941 form. So that's our next job here. Excuse me. So if I look at the 941 form, you'll notice that I've already have it completed, but I want to kind of key in on some things. Remember, we had 4 employees, right? That's in box 1. Wages, box 2. These are wages subject to the tax. And we're going to look at gross wages, right? And what I mean by that is before all the deductions. On line 2. And then line 3 is the withholding, the FIT tax amount, right? The FIT, federal withholding tax amount, is on line 3. Now, where are we getting line 2 and line 3's number? If I go back to my information, remember this is a monthly payroll, occurs in April. Well, remember, the 941 form itself, this form, is every quarter. Even if there is no payroll, an employer is still required to file this every quarter. So April, May, June is the second quarter, right? So the second quarter information then has to be tripled, right? So I'll take this gross wage here, $3,050, multiplied by the 3 months. We're just assuming for simplicity that the wage amount for every month is the same. The withholding amount is the same, right? And all the taxes are the same. Again, our goal here is just to learn how to fill out the form. In real life, this would never happen. And here is the 9150 is in box 2 on form 941. The federal withholding is box 3 on form 941. Going forward, looking down on the form again, if I move back to the form, you'll notice that we then get to line 4, which is just a check mark. If no wages were subject to the Social Security Medicare tax. For most employers, you have to have a special occurrence where that would be. I've never seen it. But you'll skip 4 and go right to lines 5A and 5C. Those are the predominant boxes to fill. Those are already, again, pre-filled. You know, in column 1 are the wages, right? Subject, it has the word wage over here, subject to the Social Security tax. Wages subject to the Medicare tax in box 5C. You'll notice also that the rate is different. It's 12.4, which is really, and I don't have this right, it should be 0.06, right? Or 6.2%, or 0.015, right? Is the, again, Medicare rate. I double those, right? And then I get my corresponding amounts here for reporting purposes. So I multiply that out and get the taxes in column 2. I add up column 2's numbers to get the amount in 5E. So use the form to help you complete it. They have a few instructions right on the form. We didn't add anything in 5B because there were no tips reported. That's what that is for. 5D is that additional tax, this 0.9% on those persons over 200,000 in wages in a year. Again, most employees don't reach that mark, so it's not required in this case. After that, 5F is skipped. 6 then is the sum of lines 3, 5E, and 5F, which is 3,124.95. You notice I didn't add commas here for reporting purposes. This form is mostly done online now. You don't fill out a paper copy. But in an online format, the IRS does not want commas. It's harder for it to read. So we move down. You notice that I have fractions, and I haven't completed or mentioned that yet, which is on line 7. You have to go to page 2 here and put in the April, May, and June 941 deposits. Since the information doesn't change, the amounts are the same. And you'll notice that when I add those 3 up, it comes up to 98 cents. Whereas, for the cents column, obviously, whereas on the form, right, when I did it in whole, this is a whole amount for all 3 months, I came up with 95 cents, which means from my deposit amount compared to the form computation, I'm 3 cents difference due to fractions. Remember, every payroll you're computing the tax, right? Whereas opposed you're combining on the form all 3 payrolls up to 1 tax computation. So that's where we get that fractional difference. Remember, we have to be sure, right, that what we report on this form is what we deposit. So this deposit number, the deposit number down here on line 12 has to match the tax on line 10. You can't have that 3 cent difference on the form itself. And then we're assuming in line 13 that we've made all those deposits. Again, that's the deposit requirements. If you're monthly, you have to have it in by the 15th of the month. If you're semi-weekly depositor, you have to have it within those days that we mentioned prior. If I look to finish page 2 then, you'll notice there's an exit. Part 3 is used if it's the final reporting or the business is closed for operations. You have to tell the IRS if you're closing your operation. Otherwise, they keep sending this form to you. And again, penalties and interest apply. And then on part 4, they say, who is someone else completing this form for you, and who is that person? We're saying no, we're going to complete the form ourselves. That's why the X is in no. And then finally in part 5, who signs this form? Only the owner does. You as an employee do not sign this form. The owner or officers, if you're in a corporation, can sign this form. The VP of Finance, the secretary, the treasurer, they can sign this form. But as an employee, if you're not an officer or an owner, you should not sign this form because otherwise you could be on the hook if this form is not done correctly. Finally, when is the form due? 1 month following the quarter. So July 31st, because this is a second quarter form, right? Second quarter ends June 30th. The requirement then is that you have this form submitted. Again, most employers now file this form electronically by the month following the quarter. All right, so hopefully that'll give you a good review of that form and how it's completed. You will do some of those in your exercises and problems. I also have another template here. I'm actually using 13A to complete a 941 form. So I just used those numbers, transferred it to the form. So for your review, before you try the logarithmic problems in the assignments, that you look at this form to be sure that we understand what is contained on each line. How do we get this fractional difference? Comparing the deposit amount to what's reported on the form, in this case 6 cents. And then also how to fill out this second page, which is our deposits, right, for each payroll. Now, this particular question, they're paying every 2 times a month. That's why we have 2 pay dates. And again, for simplicity purposes, each month has the same gross wages. Now, I do have a note here that we have to, the IRS will tell the employer if your deposits throughout a period of time, and usually it's called a look-back period, and it goes back to payrolls, starting with July 1st. Remember, the IRS is on a fiscal year, July to June. So they go by fiscal years, not calendar years for a company. And if their deposits for that fiscal period that they're looking at, that window of 1 year, exceeds $50,000 in a year, that's when you go from a monthly depositor to a semi-monthly depositor, or semi-weekly it should be. So just be aware of that 50,000 deposit limit. Again, the IRS tells the employer when that switch occurs. So be ready for that in your review of Chapter 3. All right. Toward the end of the chapter, then, pages 29 through 31, again, I'm not going to cover the entire chapter in this video, but I just want to mention penalties, because for small employers, payroll penalties are probably the one or the most common penalties that are incurred. So we have to be very careful that we fill out the forms correctly, make the deposits on time and fully, right? And that discussion's on pages 29 through 31. But I did have also mentioned here what type of penalties could be imposed: not filing return, not paying the taxes when due, not making them timely, not furnishing this list is huge. And that's why this is a big problem for many companies that maybe not are aware of all the penalties on payroll. And that's why a lot of companies, smaller ones especially, outsource or have someone else do it for them, especially if they're not in tune with all the different rules with payroll. And also, with many small companies, obviously, they go out of business, right? They don't make it. So the IRS says on page 29 that, hey, over 100,000 businesses owe more than 2 years of payroll taxes, estimated at $58 billion. When you consider the $5 billion that you're seeing in the discussion in today's world, $58 billion makes the 5 look quite small. So just some things to be watchful for. But I did use 1316A as an example of how they compute the taxes. Here we have a deposit that's due on April 15th. But the tax wasn't paid until April 29th, which means, right, 14 days it's late. So to compute the penalty, there is a timely deposit. It wasn't timely deposited because it was 14 days late. So that's 5%. So right off the bat, that's $125. You didn't pay the tax fully, so that's another penalty of 0.5%. That's $12.53. Plus there's a 5% interest. So you can see real quick that, as you're going along here, on a small $2,500 deposit, you're going to owe another $142.58 in penalties and interest. So if you can think about it, most employers are in that much larger amount, and that's why the penalties are so severe. And that's just for being 14 days late. It's not like you didn't do it at all. So that's why it gets very expensive very quickly. Okay, I did have a pre-test for those true and false questions that you'll see on the exam. These are not all of them, obviously. These are just a sample set that I want to pull together. Review on your own. Take a look at these questions. If you have any question as to why something is true or why something is false, just let me know, and I certainly can help you with that. I do talk about the semi-weekly deposit rule here, the 2-year look-back period starting July 1st. I talk about the 1-day rule, which is a deposit rule if a corporation or company has over $100,000 in payroll taxes due. You have 1 day to get it in. So that's, again, the IRS wants their money, and if it's a large amount, they want it now. So take a look at these questions. Let me know what your thoughts are on them. Let's see. I have some computations, and I don't have many here, just a couple. The reason that I have these computations is to kind of, again, prepare us for the exam. What's on the exam? That's a very common question. Well, this is one of them. We have a person here that is paid biweekly. She then gets, $6,000 per pay period. And they ask us, what is the FICA tax, Social Security, Medicare, on the 9th payroll, on the 22nd payroll, and on the 23rd? So on the 9th, and the reason we're asking this question is that with Social Security, right, you'll see this in the book, when an employee hits $128,400 in wages, gross wages, they stop Social Security. And remember, with Social Security, the tax rate is 6.2%. Medicare is the 1.45%. So there is no wage cap for Medicare, but there is for Social Security. Now, if I take 9 times 6,000, that's 54,000. Not even close to the 128.4. So the full $6,000 is subject to the tax. 9,000 times 0.062 equals $558. So I'm going to change color here. And all I did was I took the 6,000, right, times the 6.2, gives me the 558. For Medicare, I take the 6,000 times 0.0145, or 1.45%, gives me $87. So I'm taking that rate times the 6,000, and we're assuming, again, each payroll is the same for simplicity. And remember, there is no wage cap for Medicare, so it's 87 for each payroll. Now we get to Social Security for payroll period 22. Now, what I'd like to do is first look at pay period 21. So if I take pay period 21, which is just one less, right, than 22, if I take 21 times 6,000, what I'm trying to determine is what is Sue's year-to-date number. So 6,000 times 21 is $126,000. Well, that's getting pretty close to the 128, right? So if I compare this 126 to the 128, I'm only about, what, 2,400 off that amount? Well, guess what? On payroll 22, when she gets her $6,000 of gross wages, 2,400 is subject to the tax, right? So this is tricky. Sometimes students want to take the amount above the 128.4. I want the amount below the 128.4. So this 2,400, the difference here is subject to the Social Security tax at 0.062. So if I multiply that, that becomes the amount of $148.80. And I would have nothing in period or payroll period 23 because she is over the 128.4. So that computation, that analysis of how much does this employee get when she reaches that wage cap? And then obviously after the wage cap, she does have zero for her tax. So watch for that computation. There are some samples in the book also, so hopefully that should help you when you get to that question on the exam. Next, 22. This is a person who works for an employer. She gets wages. In addition, they have their own income or business. So that's listed here. They're making $50,000. So now, again, with this particular problem, there are two questions. What wages or earnings are subject to the tax? And then, what tax rate are we going to use, right? So here we're looking for earnings subject to their taxes and their corresponding tax amounts for self-employment. That's what SE means. So this is for self-employment computation. Now the SEC rates are the 12.4% for Social Security and the 2.9% for Medicare. This is another wage cap issue, right? Again, even though they're self-employed, once they reach $128,400 of wages and self-employment income, they're done with their Social Security portion of the 12.4%. So, for OESDI purposes, their earnings that are subject to the tax, remember, our cap is $128,400. Pat already earned in wages $85,000. So for self-employment tax then, when she files her business income for the year, the difference between the wage cap and the $85,000 she's already paid in under her employer, right, which is $43,400, is subject to the OESDI tax. So on your test, you'll be asked for the earnings, right, subject to the tax for OESDI, and the earnings subject to the tax for Medicare. So I'm going to switch here to Medicare. Medicare has no caps, right? So in this case, the full $50,000 of self-employment earnings is subject to the self-employment tax of 2.9% in this case. So for each of these then, you're going to multiply this by the corresponding percentages for self-employment purposes and come up with the self-employment tax amount for this person on her $50,000 worth of earnings. So in this case, 43.4 times 0.124 gives me a self-employment tax portion of $55,381.60. For Medicare, is 1,450. The sum of these two is the $6,831.60 of self-employment tax that is owed on her personal tax return, right? She's completing this on her Form 1040 form. So there are some problems with this. Also in the book, just be aware on the test, part of it will ask this question: what are the earnings subject to the self-employment tax? And the OASDI is really the only one that you have to worry about because of the wage cap of 128,400. And then for Medicare, obviously there is none, so you can just put in the earnings of that particular problem. All right. Now, also on the exam, employees have deductions, and some are pre-tax. So one of the big ones that you'll see in many companies is a 401k, a simple IRA, a defined benefit plan type deduction. So for Social Security purposes, and that's what Chapter 3 is about, for Social Security, a 401k deduction or a simple IRA has no effect on the taxability for Social Security purposes. So it's not pre-tax. It doesn't reduce the wages for the 6.2% or the 1.45%. Has no effect. It does, though, affect the federal withholding, so, or the income tax. So for the amount on line 2, which is what we're concerned about for FIT, right, which is the FIT wages, line 2's amount on Form 941 would be $43,000. However, lines 5A and 5C on Form 941, the amount would be 45. The 941 defined contribution has no effect on it. I did change it, though, for a different deduction type. And in problem 24 here, it's health related, health premium. So if an employee, again, an employee contribution is deducted from the employee's paycheck, that's reduced. For both FIT purposes, this is line 2, and for Medicare and Social Security case, which is 5A and 5C, that would be deducted. Again, it's employee deduction that we're looking at here. This 2,000 employee deduction or pre-tax deduction. Now, if an employer contributes on behalf of the employee, that too would have no effect. Employer matching, can I say? Has no effect on this amount or on these amounts, either one. Remember, they're just contributing on their behalf. It's a benefit to the employee. It's not reported on a Form W-2 as a deduction for tax purposes, because the employer is doing it, not the employee. All right, so kind of watch for that difference between pre-tax plans. I think, have a computation here on problem 26, throwing a lot of stuff at you. Pre-tax health, 401k, employer matching, and in the X things are ones that you can just delete. FUTA is a federal unemployment tax. We'll learn about that in Chapter 5. Also SUTA, which is a state unemployment tax. Those are employer taxes. They have no effect on an employee's deductions. But an employee, right, 401k, and an employee pre-tax health, these do have an effect and therefore are a reduction of those gross wages. Again, the 401k is only for the FIT computation, but the 401k and the pre-tax have an effect on Social Security. Oh, I did that wrong. Sorry, guys. No, the 401k only has an effect on the federal withholding computation for income tax purposes. The health has a benefit to both federal income tax and for Social Security. So take a look at that. If there are questions on any of this, guys, just let me know. And problem 5 is that look back period. How does this 50,000 work? Again, it's a federal deposits that we're concerned about. It's the 941 deposits, right? So if that amount is greater than 50,000 in a look back period, and I have that underlined here, we're looking at 2018. I've got to go back 2 years. Why am I starting here at the third quarter? Well, that's the fiscal year of the IRS, which is July 1st. You add up these third quarter, fourth quarter of 16, first and second quarter of 17, and we came up to 53,000. Right here's the IRS number, 53,000. That's over the 50. That employer now is going to be switched automatically. They'll get a letter from the IRS saying, hey, you're no longer a monthly depositor, you are now a semi-weekly depositor, which means what? You follow these rules. You have pay on Wednesday, Thursday, Friday. You have until the following Wednesday. If you pay your payroll on Saturday, Sunday, Monday, or Tuesday, you have until that Friday to make that 941 deposit. So hopefully that makes sense for everyone. Now, on the test, you are not required to fill out a form. That's going to be done through your assignment problems and questions, but you will have to do a weekly payroll register. But the way the test has the register listed, it's somewhat confusing. So I want to review here the columns and what's in each column. So we have an employee, obviously, and we have various hourly and salary amounts in column 2, hours worked if needed in column 3, and you'll notice in A and B, you will fill in what is that employee's regular earnings, right, for 40 hours, and then what is the overtime earnings wage amount, right, not rate, for those amounts over the 40 hours. So you'll use the time and a half, right, overtime premium. You will then add up A and B to give you C, total earnings. For that weekly, this is a weekly payroll here in column C. The cumulative tax or taxable wages will already be there. So whatever the amount is, again, what we have to be concerned about are those people that hit the wage cap for Social Security, right? So in column B then, your inputs will be what are the wages subject to the tax. And this is where students think they have to put the tax amount, and it's not. It's the actual wage computation, the gross wage. How much of column C do we report in column D? Well, Medicare, you can just take the column C number, right? Because there is no wage cap. The only caveat, I could do that in most cases on Social Security if it were not for the wage cap. But one employee does reach the wage cap, and that's what you need to figure out. How much of that earning in column C is taxable for wages in column D. Then once we hit column E then, right, We're going to multiply each of the column D amounts by the respective rates, right? 6.2 for OASDI, 1.45 for Medicare. You see the word taxes here, not wages. That's the big difference between D and E. And then column F is simply C minus the E amounts, right? There is no other deductions. There is no other federal withholding or state withholding like we showed in the beginning. It's just FICA taxes. Now, once we get into chapter 4, our next chapter, that's when we're going to start computing federal withholding amounts, state withholding amounts, and obviously we're going to revisit the payroll register and subtract those amounts when we get there. But for chapter 3, just take the earnings in column C and subtract the taxes, both Social Security and Medicare, in column E to get the net pay. There will also be totals on the bottom, right? Adding up all the employees. If you want, you can use Excel to help you answer these questions. So you could feasibly develop a Excel worksheet with these headings and just plop in the numbers for their regular earnings and overtime earnings, and everything else would be computed automatically. So think about it and let me know if you have any questions on that. So that wraps up the discussion on chapter 3. Like I said, I don't want to go through the chapter. You'll have ample opportunity in the next 2 weeks to complete that, read those examples, do the pre-test on the true and false, and these other questions, and let me know if you have any questions. Email me as soon as you can, rather than wait for the last minute. Thank you for your time, and have a great day.